Hi, this is Ante with the US stock highlights here on Share Talk for Monday, the 4th of January, and quite a few contenders to play with today. It's difficult to narrow them down, starting off with Eypt Technology, where you can see there's been a vertical move over the last couple of sessions, gap through resistance. It was good to see a bull flag there, trading either side of the old resistance around $1.50, and that was the sign that we were on our way. The current situation is that although we've headed up vertically, while there's no end-of-day close back below the previous resistance from last week around the $3 level on an end-of-day close basis, we could still see the shares head up towards that the top of that March trend channel around the $4.20 area, hopefully as soon as the end of next month. Quite a few repeat stocks in today's session, which is normally a good thing, which means that the charting has been working, or at least the bull situations have kept on going. Here we've got a gap higher for Bit Digital, or BIT Digital, floor of the gap there at $23.65, and while we're above that on an end of day close basis, then we could head up towards the July resistance line projection, currently promising a $43 target, hopefully as soon as next month. If you're trying to tighten up the stop loss, then obviously today's intraday low at 25.50 on an end of day close basis would be a possible place to go with. On to another stock which has been covered recently is by Nanogenomics, very trendy type of company name, totally on the zeitgeist as far as the whole pandemic, etc. concerned. Here we've got a resistance line projection from back in May 2019, heading towards $9, and hopefully we can hit that by the end of next month, especially while we remain above that old peak from October last year at $4.70, so above $4.70, looking towards $9 by the end of next month. Now a new situation, but with a catchy name, Chek cap. Here we've got the stock breaking through neckline resistance. That was the late July resistance around 85 cents, and while we're above that, looking for a March resistance line projection, currently promising a target as high as $2 as soon as the end of next month. Difficult to narrow up the stop loss much tighter than that. I suppose you could say that while we remain above $1.16 on an end of day close basis, then the shares should move higher, but that would be, I suppose, the tightest stop loss area, but that is rather too tight, I would suggest. Probably a stop loss at this stage just back below the $1.10 level is probably the tightest you can have, because that was resistance on the way down. Moving along to a stock which is also having quite a flourish at the moment, Eypt Pharmaceuticals. No surprise, obviously, anything with pharma in the name at the moment, normally rather strong. And the news today on a technical basis is we've managed to break through the 200-day moving average at $6.67 with relative ease. While we're above that, looking for, I suppose, the $10 area, which is was resistance on the way down from March through May and then into August. But bigger target here on a 2-month, 3-month view, maybe by the end of March, up towards $16.50, which is the top of the March broadening triangle from last year. Keeping with the scientific and I suppose the technological theme, combining both of them, I suppose, at the moment, is genetic technologies. Here we've had decent consolidation for the stock after that massive spike in July. We've seen most of the recent price action at or above the 50-day moving average at currently around the $3.28 level. That's also the floor of the rising trend channel from earlier in the last year. Current view is that an end-of-day close or above last week's peak at $4.04 should be enough to give the shares a retest of the $5.50 area, which was the July resistance. Stop loss, I suppose, back at neckline resistance around $3.60 is probably about the best you could come up with at the moment, even though I suppose today's intraday support at $3.75 is also a possible contender as a money management spot. Moving along to a stock which has been covered a few times before and continues to be on the front foot. We've got Jaguar Health, rather. The exciting part here is that we've got a V-shaped bull flag, that's what I call them anyway, with the floor of the flag resting on the former resistance area around 70 cents. And the view is that at least while we're above that old August peak at 85 cents on an end-of-day close basis, we could hit a resistance line projection target from February, currently promising a $1.75 target as soon as the end of next month. Moving along in this marathon session, we've got Lie Auto, and here a chart which looks a bit like, I suppose, the Palantir and the Neo daily charts. Here we've had a sort of base building after the peak through towards the $48 level in November. Bear trap rebound from below the 50-day moving average, and this stage, while there's no end-of-day close, back below the 50-day line at $29.93, looking for at least $33 plus at old December resistance, and then hopefully on a 2 to 3 month view, we hit the top of the rising September trend channel as high as $53 for shares of Lie Auto, or Lee Auto, I suppose. New stock for us in terms of charting is the 9, which is a rather strangely named stock, but we managed to gap through the 200-day moving average, also leave an island reversal, which is a very strong island bottom reversal, which is a very strong reversal signal, as you might expect. The view at this stage is that while we're above the 200-day moving average at $5.14, looking for the top of the broadening triangle from the end of February last year as high as $12, hopefully as soon as the end of this month. On to a stock I just mentioned a minute or so ago, which is Neo. Here the excitement coming from the break of that mid-December resistance of $49.84, while we're above that on an end-of-day close basis, looking towards $70 at the top of the June rising trend channel, an area we've been dreaming of for some weeks now, maybe last couple of months, in fact, given that in November it looked as though that wouldn't be too difficult to achieve, but had to have a bit of a retest of the $40 area and the 50-day moving average in the interim. Stock which has listing both in the UK and the US is Tiziana Life Sciences, and in fact the charts of the two manifestations of the stock look relatively similar. We have the difference today, though, is that the American listing of Tiziana doing rather better on the upside in percentage terms than the UK version. The UK is around 10% up. Here we're up 16%, something like that, or 21% in fact now, so we're doing rather well. Just breaking that line of resistance from the end of October at $2.35. End of day close above that early this week should hopefully be enough to give us a move towards the 200-day moving average, $2.86, and then hopefully by the end of March, a 2 to 3 month view, up to $5.40 at the top of the broadening triangle from July last year. Just a couple of stocks to go. Both of them have appeared here quite recently. First is Vray, and here we've got a very solid gap to the upside after the other gap in November, so looking like a very strong impulsive move here. Ideally, we get an end-of-day close early this week above the $5.19 resistance from early December, above $5.19, and we're looking for a top of December price channel target as high as $8 plus by the end of next month. Finishing off with a personal favorite of mine, just because it's such a small share price, low share price, is Medica. So very much a one for the speculative trader. Here we've had December, which was the month where the shares built a base at the 200-day moving average around 15 cents. Looks like we've got a bull flag